Click the bell icon to get latest videos from Ekeeda.
Hello friends, let us discuss now one question of dissolution of partnership where one partner becomes insolvent. Due to insolvency of one partner, firm gets dissolved. Let us read question. Sadhana, Seema, Kalpana were carrying on business. The profit sharing ratio was 3:1:2 respectively. Their balance sheet as on 31st March 2012 was as under. Balance sheet, asset side, capital account of Kalpana. That means here capital is having debit balance, that is amount receivable from Kalpana by partnership firm rupees 8,000. Land and building, this will be transferred to realization account debit side. Realization account R, debit side D, RD. Motor car, it will be transferred to realization account debit side RD. Machinery, realization account debit side RD. Stock, realization account debit side RD. Investments, realization account debit side RD. Bills receivable, realization account debit RD. These assets will be transferred to realization account debit side at book value, that is balance sheet value. Cash, this will be transferred to cash account. This will be opening balance of cash account. Debit side will be writing to balance brought down amount 3,400. Let us see liability side. Capital account of Sadhana, Seema. This will be transferred to capital account credit side. Kalpana is having debit balance, whereas Sadhana and Seema, they are having credit balance. Therefore, their capitals are appearing on liability side. Reserve fund, this will be divided between partners in their profit sharing ratio, and it will be transferred to their capital on credit side. So amount is 3,000. Profit sharing ratio is 3:1:2. That is 3/6, 1/6, 2/6. So here 3,000 is going to be divided in the ratio of 3:1:2. So it will be Sadhana 1,500, Seema 500, and Kalpana, it will be 1,000 rupees. Reserve fund will be transferred to the credit of partner's capital account. Sadhana's loan account, this is partner's loan account. A separate account will be opened and amount will be credited to that account. Sundry creditors, it will be transferred to realization account credit side RC. Bills payable, realization account credit side. Kalpana was declared insolvent. So one partner insolvent is here Kalpana. Insolvent by the court and was able to bring rupees 1,000 only. On this date, the firm was dissolved. Thus, insolvency of Kalpana resulting into bringing by her rupees 1,000 from her estate. So this is the amount received by the firm. So it will be debited to cash account and it will be credited to Kalpana. Insolvency is a situation where liabilities of a person becomes more than his assets. In that case, he approaches court, requesting court to declare him as an insolvent. When court declares him as an insolvent, all his assets are taken over by the court and his creditors' liabilities are paid by the court from his assets proportionately. So it is a decision of the court how to divide the assets of that person who has become insolvent. So in that case, partnership will get rupees 1000 from her estate. The result of realizations were as under. Sadhana took over bills receivable at a discount of 1300. Bills receivable is 6300. It is taken over by her at discount of 1300. So 6300 minus 1300, it is taken over for rupees 5000. Here Sadhana's account will be debited and realization account will be credited. And agreed to pay bills payable at rupees 4900 in full. So Sadhana is also agreeing to pay bills payable at 4900. Here her account will be credited and realization account will be debited. It is a liability taken over by partner. Bills payable are 5900. She is settling it for 4900. Difference profit should not be recorded separately because it gets adjusted in a realization account. Next adjustment, the assets realized as under. Land and building 18,900. 1. Motor car 3,800 less. The value of motor car here is 16,200. When it has been sold, we got lesser amount. 16,200 is book value of motor car. So here motor car we realized 12,400. That is the second asset we have sold. While reading the adjustment, we are required to be very careful because they have said motor car rupees 3,800. Students, sometime in a hurry, we read motor car rupees 3,800 and we assume that it is sold for 3,800. If we miss that word 3,800 less, that means we have received book value less 3,800. So we are required to be very careful at the time of examination when you are reading question. So it is sold for 12,400. One effect will be cash account debit. Another effect, realization account credit. So motor car is the second asset sold. Machinery 1,300 more. This is the third asset sold. Machinery is having book value 22,500. Machinery is sold for rupees 1,300 more. 1,300 more means more than book value. Book value is 22,500 plus 1,300. So machinery is sold for 23,800. This will have one effect. Cash account debit, realization account credit. Investments, fourth asset sold at 18% less than the book value. Investments having book value 10,000. Investments at 18% less than book value. So 18% of 10,000. Book value of investment is 10,000. 18%, that is 1800 less. That means it has been sold for 8,200. Cash account will be debited and realization account credited. Stock, fifth asset, was sold for 1,700. Here clear selling price is given. So this will be debited to cash account and credited to realization account. So for all these five assets, the amount realized will be recorded to the debit of cash account and to the credit of realization account. Next adjustment, sundry creditors were paid off less 1,900 as discount. Creditors are 41,900 book value. Sundry creditors 41,900 minus discount 1,900. So amount paid will be 40,000. This will be credited to cash account and debited to realization account. Creditors paid settled for 40,000. This discount should not be recorded separately in books because it gets adjusted in realization account. Sadhna's loan was discharged in full together with interest payable rupees 800. Sadhna's loan is 9,200. This is principal amount. Principal amount payable on her loan is 9,200. At the time of dissolution, some accrued interest is required to be paid. So that is also paid along with this principal amount 9,200. Principal amount 9,200, interest payable 800, total amount payable 10,000. This will be debited to Sadhna's loan account and it will be credited to cash account. Realization expenses were 1,500. Realization account debit and cash account credit. Payment of realization expenses 1,500. Prepare necessary ledger accounts to close the books of the firm, distributing capital deficiency of insolvent partner, if any, among the other solvent partners in profit sharing ratio. This is the rule given by Indian Partnership Act 1932. In case of partnership, liability of partners is unlimited. So in case of dissolution, if there is any shortfall in insolvent partners capital account, that shortfall deficiency is shared by other solvent partners in their profit sharing ratio. Same thing is asked at the end of the question. Let us prepare all ledger accounts. One thing, student, you are required to note over here, even though insolvency adjustment is given in the question, you should solve the question as you are solving other questions that when insolvency is not involved. All other steps of solving the problem, like transferring of assets and liabilities, realization of assets, realization of liabilities, payment of dissolution expenses. All these steps we are required to do as we do in case of any other problem. We have to close realization account, we have to find out profit or loss, that also we are required to transfer as we do in case of other problems. Actual insolvency procedure starts after closing realization account. How to do that? Let us see now. First step of solving the problem is to transferring all the items from balance sheet to various accounts. This we call as transfer stage. We can start with asset side. Land and building, motor car, machinery, stock, investments, bills receivable will be transferred to the debit of realization account at book value. Realization account debit side to sundry assets, land and building, motor car, machinery, stock, investment, bills receivable. Book values we have recorded here. Total amount is 88,600. Capital account of Kalpana, it is there on asset side, that means it has got debit balance. Amount is 8,000. This will be transferred to her capital account. Partners capital account debit side to balance brought down. Kalpana's column amount is 8,000. Cash 3,400. This will be transferred to cash account on debit side. Cash bank account debit side to balance brought down. Amount is 3,400. We have completed asset side. Let us move to liability side. Sadhana's capital, Seema's capital having credit balance, it will be transferred to their capital account on credit side. By balance brought down, Sadhana 24,000, Seema 16,000. Reserve fund 3,000. This will be distributed among partners' capital in their profit sharing ratio. That is 1,500, 500 and 1,000. By reserve fund 1,500, 500, 1,000. Sadhana's loan account 9,200. This will be transferred to her loan account on credit side, which is separately opened. Sadhana's loan account credit side by balance brought down 9,200. Sundry creditors, bills payable. These two liabilities will be transferred to realization account credit side. Realization account credit side by sundry liabilities, sundry creditors 41,900, bills payable 5,900, total 47,800. We have transferred all the items of balance sheet to various accounts. We have completed first step of solving the problem, that is transfer step. Second step will be realization of assets. Kalpana was declared insolvent by the court and was able to bring rupees 1,000 only. So we have received 1,000 rupees from Kalpana's estate in her insolvency. So it will have one effect, cash account debit, another effect, Kalpana's capital account credit. Cash bank account debit side to Kalpana's capital account 1,000 rupees. This is recovery from her private estate upon insolvency. Kalpana's capital account credit by cash bank 1,000. This is amount recovered from her private estate. On this date, the firm was dissolved and the results of realizations were as under. Sadhana took over bills receivable at a discount of 1,300. Bills receivable are of 6,300, less discount 1,300. That means she took it for 5,000. This will be debited to Sadhana's capital account and credited to realization account. Realization account credit side by Sadhana's capital account for bills receivable taken over at 5,000. Sadhana's capital account debit to realization account for bills receivable taken 5,000. Agreed to pay bills payable at rupees 4,900 in full. Bills payable are of 5,900. She is taking over this liability in settlement for 4,900. This amount will be credited to Sadhana's capital account and debited to realization account. Realization account debit side to Sadhana's capital account for bills payable taken 4,900. Sadhana's capital account credit side by realization account for bills payable taken over 4,900. Second adjustment, the assets realized means sold as under land and building 18,900. 1. Motor car rupees 3,800 less. Here we have done the calculation, that is it is sold for 12,400. 2. Machinery rupees 1,300 more. Third asset. Here we have done the calculation. Machinery is sold for 23,800. Investment at 18% less than the book value. Fourth asset sold. Here we have done the calculation. Investment is sold for 8,200. Stock sold for 1,700. This is fifth asset sold. Money is received. So this will be debited to cash bank account and credited to realization account. Realization account credit side by cash bank, land and building, motor car, machinery, investment and stock. Total amount realized is 65,000. Cash bank account debit side to realization account, land and building, motor car, machinery, investment and stock. Total assets realized rupees 65,000. Sundry creditors were paid off less 1,900 as discount. We have done calculation over here. Sundry creditors book value 41,900 minus discount 1,900. That means amount paid is 40,000. This will be credited to cash bank account and debited to realization account. Cash bank account credit side by realization account, creditors paid 40,000. Realization account debit side to cash bank 40,000, creditors paid. Next we have Sadhana's loan was discharged in full, that is principal amount, together with accrued interest, that is interest payable rupees 800. So total amount will be paid 9,200 principal plus interest payable 800. Total amount is paid 10,000. This will be debited to Sadhana's loan account and credited to cash bank account. Sadhana's loan account On debit side, we have recorded to cash bank 10,000. We can close this account now. Credit is 9,200 and amount paid is 10,000. Debit is 10,000. So balancing figure we are getting on credit side, that is for accrued interest payable. This amount of difference will be transferred to realization account. Realization account debit side to Sadhana's loan account, that is for interest payable, amount is 800. This will have another effect in cash bank account. On credit side by Sadhana's loan account, principal plus interest, total amount paid 10,000. Realization expenses were 1,500. This will be credited to cash bank account and debited to realization account. Realization account debit side to cash bank for expenses paid 1,500. Cash bank account credit side by realization account 1,500 for expenses paid. With this we have given effect to all adjustments. We are required to proceed for now closing ledger accounts. First account we are required to close is realization account. Realization account is closed. Debit side total is heavier, 1,35,800. Therefore, we are getting balancing figure here on credit side 18,000. That is, it is a loss on realization. This loss will be divided among partners in their profit sharing ratio 3:1:2. So Sadhana 9,000, Seema 3,000, Kalpana 6,000. This will be transferred to the debit of partners capital account. Partners capital account debit to realization account, Sadhana 9,000, Seema 3,000, Kalpana 6,000. That is loss transferred. Up to this point, there is no difference in a problem where there is no insolvency and there is insolvency of one partner. After this, the procedure for After this, procedure for insolvency will start. First, we are required to close insolvent partner's capital account. As per the information given in the question, we should first record amount received from the private estate of insolvent partner. In this question, that amount was given at the beginning of adjustments, rupees 1000 received. That we have credited here to Kalpana's capital account. So that step is over. Now we are required to find out deficiency of her capital account. Formula for finding deficiency is total of debit side minus total of credit side. Debit total of Kalpana's capital account is 14,000, which is heavier than credit. Credit is 2,000. So deficiency in her capital account is rupees 12,000. As per Indian Partnership Act 1932, this deficiency 12,000 of insolvent partner Kalpana will be shared by Sadhana and Seema in their profit sharing ratio, that is 3:1. Accordingly, Sadhana's share will be 12,000 multiplied by 3/4, that is 9,000. Seema's share will be 12,000 multiplied by 1/4, 3,000. So our journal entry will be Sadhana's capital account debit 9,000, Seema's capital account debit 3,000 to Kalpana's capital account 12,000. Sadhana and Seema's capital accounts are debited to Kalpana's capital account. Deficiency shared 9,000, 3,000. Kalpana's account is credited by Sadhana's capital account 9,000, by Seema's capital account 3,000. At this point, Kalpana's capital account is closed. It is tallied with 14,000. Now we are required to close Sadhana and Seema's capital account and follow the same procedure what we do in other problems. That is, difference of their accounts will be transferred to cash bank account, and finally cash bank account will be closed. Let us start with Sadhana's capital account. Sadhana's capital account, we have balancing figure on debit side 7,400. Seema's capital account 10,500. This will be transferred to cash bank account on credit side. This shows that these are the amounts paid to these partners in final settlement. Cash bank account, credit side, by capital account of Sadhana, Seema 7,400, 10,500. These are the amounts paid to partners in final settlement. We have closed cash bank account. It is tallying debit as well as credit. Total is 69,400. It means we have solved our ledger correctly. In this question, we learn how to prepare ledger when one partner has become insolvent. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.